Well, good morning, good afternoon, or good evening to everyone here in attendance today. And I want to thank all of you for joining us for the Tim Morge and CME sponsored presentation on long-term price market structure. Now, before we get into the meat of Tim's presentation, I actually would like to bring on David Gibbs. David has worked with us with our School of Futures series, webinar series, presented by the CME over 2012. So, David, I'm going to put this on your slide and let you take it away. So thanks for joining us, David. Let's get started.
Thank you, Cynthia, and thanks to all of you from around the globe for joining us today. My name is David Gibbs, and I'm a Director in Product Marketing with CME Group in Chicago. We're very pleased to be co-sponsoring this event with Interactive Brokers, and I have to say it's always very impressive to see everyone from so many parts of the world coming together for these events. Very impressive indeed. Thank you all for being here. I'm also particularly pleased to be able to welcome you to this special presentation with Tim Morge on long-term price market structure. It's an event that I think you'll find incredibly useful. As traders and investors, you look for opportunities in the market and ways to profit from these opportunities. Futures are an extremely flexible and effective tool for expressing your market opinions and profiting from your decisions. CME Group futures markets trade electronically almost 24 hours a day, providing traders an opportunity to trade price action and market volatility in contracts any time of the day from around the world. Our futures and options contracts cover markets as diverse as agricultural commodities, energies, metals, interest rates, equity indexes, and foreign exchange. If you're looking for more information, I would strongly encourage you to visit our website at cmegroup.com, where you will find detailed information on our products and services, as well as market commentary and educational tools to help you with your trading development. In today's presentation, Tim will focus on possible trading opportunities presented by long-term price market structure in markets such as bonds, FX, grains, and metals. A long-term trader and member of the exchange, Tim currently devotes much of his time to teaching traders and running his educational website and services at marketgeometry.com. A year ago, we initiated a series of events with Tim where he presented his ideas and strategies for trading across a range of markets. We look forward to continuing regular webinar events with Tim in 2013 and encourage you to look for the archived recordings of Tim's past presentations on the Interactive Broker website. Tim, thanks for being with us today, and good luck.
Thank you, David. Let me just double check. Can everybody hear me? Testing 1, 2, 3. I sound okay? Oh, great. Cynthia, I'm okay?
Sounds great.
Okay, great. Let me just tell you, first of all, the greatest present I got this Christmas was, I can't tell you how many emails I got from people that went to the presentations that we did with the CME and Interactive Brokers. People sent me all kinds of different, nobody sent me anything asking anything. It was all thank you, I appreciate it, I hope you're doing things in 2013. And of course, Cynthia and I are going forward. We're going to be doing something every month. Same thing, second Thursday of the month, all year long. So put it on your calendar. It just makes my month, trust me. It's all good. Oh, thank you, Carlos. I'd ask one thing. Steve from Deerfield, my company is actually called Blackthorn Capital. Not that means anything to anybody. I actually manage wealth for countries. I'm a sovereign wealth manager. Would you check my house in Riverwoods? I have a nice house in Riverwoods. I haven't been back in 2 years because I'm not flying at the moment. And just let me know how it is. You'll be able to tell which one it is. Anyway, let's get started with long-term price market structure because we've only got about an hour, and we'll see where it goes here. And I don't want to do that, but that's okay. I'll move on. I have to get to. I'm rusty. It's been a year. This is a new year. I need the pointer there, darling. Where's my pointer? There's my pointer. Okay. There we go. That's my company, marketgeometry.com. We try and help traders. You know, we don't give tips. We're not chat rooms. The idea is we try and help people learn how to become consistently profitable traders. For some people, it's relatively easy. We have to just point out a few mistakes. Other people are starting out. It just depends on who's there. But you know, a lot of what we do in these sessions monthly. It's a great place to start. You can go back and see all of these. In fact, you can go back and see some of the sessions that we've done all the way back to 1985 with Cynthia. This is my risk disclaimer. It's probably not as comprehensive as Cynthia, but anytime you do anything, yeah, I'm sorry it's only 1 hour, but we're kind of handicapped. I guarantee you next month it'll be longer than an hour. This is my risk disclosure. I guarantee you the Cynthia's is more comprehensive, but anytime you do anything in the financial markets, you must do it. Pretty much, you can read it, but pretty much what mine says, there's two important things. There isn't a holy grail and I don't have it. Anybody that tells you there's a holy grail and they're willing to sell it to you, walk away. Secondly, this is extremely important. This is one person's experience, and your experience may differ. All of us have different levels of expertise, different levels of knowledge. We've been in the markets longer periods of time, shorter periods of time. Some of us have different abilities. So just because I can do something or someone else can do something does not mean that you will be able to do it. You may be able to do it after practice, but do yourself the favor of taking the time, learning the information before you go putting some real cash on it, okay, please. So we're going to be talking about long-term price market structure trading in 2013. How many of you think that this means that I'm going to tell you the 5 markets that are going to have major moves in 2013? Good. Don't care. Am I a genie? Good answer. No, it will never happen. Okay, these are probably people that know me. Look, trader or prognosticator. I do have a PhD in economics from the University of Chicago, but you know what? I gave up being a prognosticator a whole long time ago. Ain't no point. Chris says it would be nice. The problem is I could tell you, but it probably wouldn't be true. So I'm not going to lie to you. Instead, I'm going to give you something that you can use as a trader, because that's what I am. That's what I make my money as a trader. I manage money for 4 of the largest sovereign wealth funds in the world, and I don't do it by guessing. I do it, frankly, by trading. So I'm going to walk through some markets, and I want you to take a look at the screens, at the charts that I show you. I'm going to draw some lines. I'm going to add some things. I'm going to subtract some things. And I want to see if I can elicit some feelings in you. And each time you see these charts, what I want to know is, okay, do you have an opinion? Are you ready to trade? Is it time to go? Let's take a look. I'm going to start out with some things that I thought about. I took some time off over Christmas. And in point of fact, I haven't traded. I take that back. I traded in late December, early January, but I hadn't traded before then since the middle of October. I took 3 months off. I had my best year rate of return ever last year, and that was only with about 7 months of trading. And for some personal reasons, I had to take some time off, and it was really fascinating because I can't remember the last time I took 3 months off. So, you know, I had to come back in and knock off the rust. But I took a long time to think about it. I jotted down some notes, and I thought I'd share them with all of you. Go ahead and read along with me. You can certainly read the slides afterwards when you pick them up. You cannot let the market's movements force you to trade. You cannot let your urge to catch a move drag you into following a move underway. That's called compulsion. Now, just like playing blackjack, you have to know in advance the situation you face as the dealer looks at his hand. You don't need to know what his cards are. You know what your cards are. You cannot react to the dealer's face after he gets his cards. You must know what to do before the situation comes to you. You have to know several moves in ahead what to do. This is the simplest illustration because it doesn't have many levels. It's simply a number of cards, a simple number of outcomes. You cannot play the reaction to a reaction here. There's only an outcome. Now, most traders say, and that'll be a lot of you, if I do not have a position on and I want to have one, after I read the news and the market starts to move and starts to trend away from me, I feel like I'm punished for missing the move. Or, if the news comes out and then I chase the move, it seems like it turns against me. It flushes me out. If I'm watching a market and I see two possibilities, if I choose one, it always seems like it's the other one that's right and the one I choose was wrong. Look, you've got to see ahead and trade ahead, or you will always be wrong. You must see and feel the reaction, or you must stay out. It's generally not the news that makes the move. Now, by the way, if you're typing, don't type privately, type to all participants, by the way. It's generally not the news that causes the moves, the big trends. It's the move after the reaction. So the move will come out, there'll be a move, and then the reaction will start. That's when the real players pay attention. You must be playing not for the news, not for the reaction to the news, but for the real move about to reveal itself, whatever that is. You have to gauge the reaction to the news before the news comes out, and you have to be prepared. Am I going to stand aside? Am I going to jump in front of the news? Or am I going to play the follow-through? You have to know in advance what you're going to do. You can't make that decision based on what the market is doing. If you don't know in advance which you are willing to put your capital on, you will lose your capital. To win today, you must think and draw in multiple dimensions. If you're typing questions to me, I'm not going to answer right now because otherwise we'll never get through slides. Do not simply fade every move. You're going to go broke. So it's not as simple as fading every move either. You must learn to think multiple moves ahead of each market like a feared chess player. And by the way, I have a ranked chess player in my house. My son is a ranked chess player, and I fear playing him. And the reason why is when I make a play, he says to me, "Dad, 8 moves ahead is checkmate. It's over." That's how you have to be in the market. You have to know what you want to do and be ready to do it. It doesn't matter what's going on in the marketplace. Don't watch every squiggle. Be ready to trade when it's time for you to trade. Let's begin by evaluating the major markets now that we're in 2013, and the fiscal cliff, thank God, is behind us. The only thing that saved my sanity is I don't listen to the radio, I don't watch TV, and I don't even get the newspaper. But even then, my children asked me about 3,000 times about the fiscal cliff, and all I said was, who are they and who cares? It doesn't matter, Democratic or Republican. I wish they all fell off the fiscal cliff. I'm so tired of hearing about it. I didn't even read the details of what happened. It doesn't matter. It's all baloney. As I describe what's going on in each slide, you should be asking yourself, is there anything that catches my attention? It's all in the market. Is price telling me the market is about to take off? Or is this market at an area where it is decision time and a move of some sort is very likely? Is everybody ready to play? These markets are current. These slides are current. I got 2 people. Anybody else? Okay, I got 3. That's enough to play. Everybody else can play or watch. Here we go. We're going to start out with bond futures. And I'll show you, I knocked the rust off and made a very nice first trade of the year. Probably dumb luck, but I'll take it. I'll take dumb luck any time of the day. Let's take a look. I wish this slide was a little larger, but let's take a look. So bond futures, what do we have? We've got a little bit of a base here. We've got higher lows, We've got a nice spike up, a run back down. The run did not take out any of the lows. Consolidation again, another run up. We come down, we don't take out any of the lows. These are all the things you should be looking at. I don't care what people in Washington are saying. It doesn't mean anything to me. A bunch of baboons is called a Congress. I like that. Then we had a nice fat run up now. And again, this is a long-term chart. This is 2007 through 2013. Now as we come into 2012, you can see, you know, small sell-off to 135. Then we had a beautiful run up all the way up into 150s. And what have we done now? Let me just go ahead and draw it. Let's draw it to here. We consolidated. Whole lot of nothing. Whole lot of nothing. Back and forth, back and forth, back and forth, back and forth. What are we doing? When price does this, price is rebuilding energy. Price has basically, it's just like your body. It's either expending energy or it's regaining energy. That's what your body does. The world acts just like it. Everything in the world acts just like it. This is actually, no, it's not a weekly chart. This is actually a monthly chart. And most of you are probably not we'll look at weeklies in a minute. Most of you are probably not used to looking at monthlies, but yeah, this is a big long-term chart. But that's okay, it doesn't matter. Distribution, that doesn't work for me. Look, I think I'm a physicist. I also have a PhD in physics. I think of it in terms of pure energy. Okay? When price is moving, it's spending energy. When price is doing this, it's relaxing, and what's it doing? It's restoring energy. So see, when we get to this area, price is restoring energy. Yes, it is. Well, maybe it's a weekly chart. I could be wrong, but it doesn't look like 52 weeks to me, but it doesn't matter. It's not a daily, I'll tell you that. We get into this area, and now we're consolidating. Now, let me erase that and that, and I'll leave that part so you can remember what I was talking about. I'll get my cursor back here. Where are you? Come back. I've been a bad boy. They took my cursor away.
Pointer in the upper left-hand corner.
The darn thing won't come. Oh, okay. Duh. You know, it's the first one of the year. Sorry, Cynthia. All right. So,
not a problem.
So here we are. You can see all the touches right here. You can buy all you want in the world, yet it kept coming down here. You could get long and get a run up, long, get a run up, long, get a run up. They're trying to beat it down. They're trying to beat it. They're trying to beat it down. When they finally poke back above, this thing has all kinds of energy. What exactly would you expect if it's full of energy and it breaks out to the top side? What would you expect? It should explode. Yeah, it should explode to the upside. And instead, we get I don't have a better word. We got a popcorn fart. We got two handles, but we got almost nothing. When you look at these charts at home, you can blow them up. On the third bar, I went short because it's a relatively small stop. And I got short at 153, took my profit at 146. I could have gotten a whole lot more out of it, but it stopped and paused. It was the first trade of the year for me. I'm just trying to knock the rust off. This was just easy. For me, this is, if you go back and look at some of the other IB seminars earlier in the year, this is similar to what I call a corner trade. It's not the prettiest. Yeah, there's 3 drives in there. It's not the prettiest in the world, but it's the inability to take off at this point that tells me it's time to trade. Now that we're down here, let's say that this is today right here. Does anybody have anything they want to do? You want to trade right here? What do you want to do? Okay. People want to wait. Oh, I got a couple people that want to get long. Okay. Oh, you want to buy a bar? Okay. You know, I don't. If you're going to buy, let me ask you a question. The next swing low is all the way down here. This is your stop right here. So you're going to get long. A couple people said they wanted to get long. You're going to get long at 143, 142 and a half, and your stop is 134. That's chasing the market. That's right. Taz wants to chase the market. No, I think you're kidding, Taz. Well, you can get long if you want, but if you actually use a quality stop, it's below 135. And I think that's probably more than you have in your account. So let's take a look at another picture. Let's just draw some horizontal lines. This is what I do all day long. Horizontal lines. This looks like a major base to me, down around 114. Looks like I've got another base right around 135, the area that we talked about. You can see that it's right about the area where we had this explosive run up and failure. Minor tops here. It was the base for this run up. So we've got a nice base here. We've got another one right around 141, this high. You can see some touches. These are called multi-pivot lines, by the way. So now your question is, if it gets down in these areas, are you interested in doing something? Let's draw some more. If I put in a action-reaction line, here's my center line. I want it to cut through the action. And you can imagine it out here. I guess I probably should have put it out here. But when you get your slides at home, go ahead and slide it out here. If price, that'll be about the middle of 2013. The lower one will come in right around here, around 135. That's a possibility. Graph regressions, we don't do regressions here, Tom. Regressions actually came from this study. That was long before we had the computing power to do regressions. This study was developed in the 1920s. All we're doing is looking at multiple highs and lows, and we wanted to cut through the center of the action. That's the center line. Then we take a major high, pop it to the top, and you can see it grabs it here, take it through a low, and push it forward. That's all. This is not a channel. Not a channel. Let me say it again. But looks like there may be something going on, I don't know, around 135. Let's see what else we can get. Here's a median line. All I did was a major low, major high, major low. It shows me the probable path price. It's a little sloppy. I'm not sure that I'm ready to trade off of this one. What else can we do to it? Let's use the same pivots and make it a modified shift, which means we take this A pivot and go up 50%, over 50%, and make this the A, and that changes all the slopes for the upper parallel, the lower parallel, the median line, and the warning line. Now we're catching the lows beautifully. Look at it get tested, tested, tested. It gives us an area that's a possibility along these prior highs, this multi-pivot line. So that's a possibility. Yep. So anybody got an idea on what they want to do in the bonds before I move on? Wait. As a whale, if you don't know what that term is, go back and view some of the IB sessions or go to Market Geometry and read some of the 3 articles. In the markets I trade, I'm one of the 5 largest traders in any of the markets that I trade. Those are whales. Their orders can, stop a market or turn a market. This is definitely an area where I would be interested. And depending on the market action, I might be interested right here. Either one of these could end up being where your friends, the whales, show up and have an interest. You want to wait till price gets there, maybe at a test and a retest, and just make sure that they're in the area. All right? You get a buy order in the black line? Okay, I have no problem with that. My only question about buy orders at the black line, I want you to think about it. You don't have to answer it. If you put a buy order at the black line, where's your stop? Yeah, and there's absolutely, somebody says, what about the prior two highs? Can I draw a line through them? And yeah, you can absolutely make the case for a short position. A little below the back line is a cash stop. I don't use cash stops. You're just guessing at that point. We use stops below structure like this, or this, or this, below swings. Okay? I don't know anything about bull and bear flags. They confuse me. I don't know anything about them. Sorry. Doesn't mean they don't work. It just means I don't know anything about them, and I don't want to know anything about them. I know what I know. All right. Let's take a look at the stock market. I'm not going to look at the E-mini S&Ps just because I did work on the Dow. So this is a monthly. I know this one is a monthly. This is a monthly Dow. This is 1996. We had a nice rally and a pullback, and I made our ultimate top here. We'll get to the euro. Relax. We pulled all the way down, 6,200. Everybody remembers that. And now we've worked our way up nicely. And we're back up around 13,500, something like that. Those of you that follow me for a long time and watched me live on MSNBC as well as on Traders Expo and IB know that before the week before Lehman Brothers, I was interviewed and somebody just cavalierly asked me what we thought of the Dow Jones. I happened to have a chart with them, and I showed them that I had just gotten short, and I thought, you know, it was going down. They asked me where I thought it was going. I told them 7,200, and they thought I got it wrong. And of course, we went to 7,200. We went a bit more. I'll show you that exact chart, and it's still playing out. So let's take a look and see where we think the Dow may be going. And again, this is a monthly. You're not used to taking looks at monthlies. So here's a traditional median line from the low in 1996, major high, major low. No tricks here. I'm just using the major pivots, using a charting tool, drawing it on, plops it on. Let's take a look at it. You're going to look at it and say, I don't know if that's doing anything for you. Most of you just erase it. Let's see what I do with it. I make it a modified shift, which means I move the A up 50%, which is halfway between here and the B, up 50% and over 50%. That changes the slope of the upper parallel, the lower parallel, and the median line. All of your charting programs do this. Look any more interesting to you? Did a fairly nice job at this high, doesn't it? Do anything else for you? Calls a nice pullback here. But I see something else. How about this? Gave us the exact low. It's not a mean regression. It's not anybody's, fancy. You know, if you have a method of doing the markets, please keep it to yourself for now. Let's just pay attention to what I'm doing. You can do your own seminar someday. This is called a warning line. It's the same distance, and you can see it called the bottom perfectly. This is a great area to take your profits. I took my profits at 7,200. If I followed my own work, I would have got another 600 points out of it. But you can see there's an interesting multi-pivot line going on right here that I don't think we should ignore. So let's take another look. Let's go to the next set of major pivots. This low, this high, this low. It gives us a nice upsloping median line. When you look at it, it doesn't, now remember I've left the other one on there in light pink, you can see it. When you look at the new one in blue, it doesn't look like it tells you much, does it? This is the Dow Industrials Cash. That's exactly right, Robert. Although the Dow futures follow this pretty well. Let's do something interesting. Let's take this median line, this low, this high, and this low, and pay attention. This is upsloping, and let's make it a modified shift. Now, when I do the modified shift from this low, this high, and this low, the modified shift is downsloping, and look at the high that it gives me. And I've got two things going on. I've got two lines of opposing force. How did I do the shift? On all of your charting programs, if you just right-click where it says Andrews median line or median line, it'll say shift or modified shift. Some of them say 50%. That's what a modified shift is. Very simple. You'll see it called this high perfectly, and that's nice. But since we're talking about going forward, I love lines of opposing force, and we've got an upsloping line and a downsloping line, and this is called an energy point, and they come together right in this area right here. I would love price to make some downward progress and then come back up and get to this area, because look, I have a very small stop now. Somebody was talking before that they would just put a stop underneath a line. I don't trade like that, because I know other people will be willing to sell this prior high, including whales like me. So if I want to get short, this is a great area to get short, because there'll be natural sellers right here. If you're wrong, you're wrong, but it's a small stop. It's going to work out pretty good for you. So this is an interesting area to watch. What percentage of the time do I use a modified shift? When it fits. I use all angles when they fit. So this is an interesting area if you're looking for downside movement. If you're looking for, well, let's just go to the next screen. We took off the sloping one. Here's the original median line on a smaller time frame. Now we're on dailies. Does it help? Well, if I was trading out to 2016, I guess I'd be at this energy point, but that's not what we're here for. We're flirting with median line. I'm not ready to trade against this, and the stop is all the way down here. I do have this multi-pivot line here. Is anybody willing to trade off of this chart? Forget about your opinion of the market right now. Just off this chart. Yeah, that doesn't work for me either. And Cynthia's telling me I'm about halfway. That's okay, Cynthia. I'm doing good. Failed 3 times to penetrate the median line. Yeah, that's okay with me. The big deal is if I get the median, it doesn't. There's no stop until down here, and I don't want to get short against an upsloping median line. Okay. So I need something else. Let's see what else we got here. This, and it'll be much more interesting when you download the slides and you can blow it up and take a look at it. This is the slide that I use live on MSNBC and Traders Expo and also IB. A week before Lehman Brothers, when the market fell apart, I got short right here. And I wrote it down to 7,200. 1350 to 7,200. It was absolutely magnificent. I don't know that I'll make another trade that pretty in the indexes. I don't even like the slides. When you check out the slides, will say, "Do you want to download the slides?" Don't worry about it. It's easy. You can't miss it. I don't like to trade the indexes long term that much. Oh, my stop was right above the high here. I had a very small stop. It was a no. Listen, I use equivalent risk stops, which means I risk the same amount on all of my trades. So I didn't have some crazy wild stop, and it was above market structure. But download it, and you'll be able to pick it out right away. When price came down and then retested this green outer warning line, you'll be able to see right where I got short. And you can see it ran all the way down, and I was able to snug my stop and snug my stop and snug my stop, and then finally just run away. And then when price came up here and started to run ahead, test the warning line, and then came back to this next multi-pivot line, I actually got long. I got long a lot of bank stocks. Now this one I didn't run all the way. I actually was chicken. I made money, but not the kind of money I made on the downside. But here's the interesting thing. Take a look at this median. Take a look at this median line. This median line ran for a year and almost 2 years. Look at the upsloping median line. Ran from 2009 to the present. It's still working. How about that? Do I use Elliott? No, I don't. I don't use Elliott, and I don't believe in Elliott. I'm sorry if you do. I know an awful lot about him, and because of that, I don't use him. Take a look at this. This median line has been golden all the way through. It's now 2013. Look at the buys you could have carried out all the way up. You could have bought, take your profit. Bought, take your profit. Bought, maybe you're in. If nothing else, it's giving you the probable path of price. Anybody ready to get short yet? See, I could be a prognosticator and say, I don't see this thing going any higher because of all the problems in the United States, et cetera, et cetera, et cetera. But what the hell do I know? Yeah, okay, I've got a fancy degree, and I know all kinds of people in Washington, and I sit on lots of panels. I sit on some of the panels that you guys think are secret. But you know what? What do I know? The market's going to go where the market's going to go. It'll be over when it's over. Trade what you can see. You got it. Beat a line until it beats you. Absolutely, Cal. Okay, let's look. Let's blow it up. Let's take a look at where this market turned and see what it looks like. And maybe that'll help you up here when this market finally does turn. This is a blow up, and you can see we're in 2009. Here's this market starting to turn. The market came down. Where did it go? Look at it test the lower parallel. Test the lower parallel. Test the lower parallel. It can't get through. What do we talk about? 3 drives. 1, 2, 3. Now, if you like 3 drives, I use it a lot. You don't have to use it. You don't have to believe it. I just look at the top of the 3 drives. If it takes off the top of the 3 drives, especially if those 3 drives are beating support, and you can see here, they're beating on this lower parallel, which is where price should run out of energy, and it is running out of energy. When it turns back up and breaks above, that's this red line, what are we going? Well, it looks like we may have gone a rally. We come up, we break not only the upper parallel, now we go all the way to the warning line. We stop, we test it again, and we've got a multi-pivot line going right here. You can see it get tested 1, 2, 3 times. This is a great area to get long. This is where I get long. The daily. 1, 2 test, I got long on the 3rd test. Put my stop underneath the original test, which poked below. Never got stopped out. I should have just let it run. I'd probably still be long. But I didn't. Didn't have the cojones for it. Okay, here we are. This blue line is the same. Let me go back. Watch. See this blue upsloping median line? Everybody see this? That blue upsloping median line is this. This is the lower parallel of that same blue median line that was drawn in 2009. That's a long time ago, folks. But it's still working. And this is today. This is actually last Friday. So 4 days ago. And if you want to know what the Dow's done, isn't 3 drives kind of Elliott? I'm not even going to comment on it. Okay, it's not that I disdain Elliott. It's just that I don't want anything to do with it. Okay. If that works for you, that's fine. It's fine. I don't care. 3 drives actually comes from somebody about 20 years before him. It's actually 3 farmers. It's called Westfield. You can buy it. It's before Dow Theory actually saw. So you can actually buy their original papers. It's a group of farmers who used to sit around a table and pass around charts. If somebody wants the name of the company that sells it, I think it costs all of $30. It's some of the best cool little price patterns I've ever seen. And it's just cow, pig, and corn farmers that's sitting around trying to figure out how to hedge their crops. So anyway, here we are 4 days ago. And the only thing that Dow's done in the 4 days, it hasn't made new highs. It hasn't taken out this low. It's just kind of traded. Let's see if I can do this. It's done a little of that, and a little of that, and a little of that. And that's the Dow. And that's what we got going right now, okay? Simple. So what's going on? Nothing. Now, this red down-sloping median line, not too interesting, is it? Let's say that you decide this energy point, I don't, for me, because we blew through the top of the red, we have done a good job respecting the blue. I'm not too interested in this energy point. It may be the greatest buy in the world, but if it's the greatest buy in the world, it's just the greatest buy in the world off this blue lower parallel, as far as I'm concerned. And the reason why is, let's take a look at this red median line. It don't do nothing. So I'm going to show you another technique. Albert says Schiff. I got a better one for you, Schiff. Albert, ready? Let's say that Albert says, you know, I think this thing is looking toppy to me. No, the red median line hasn't done enough for me to bother to think about Hagopian. So here you go. No, I don't care about Hagopian because it hasn't done anything. It's really not. Price isn't respecting it. Not compared to the blue. I got a better idea. Ready? Forget it. We can do one of two things. We can draw an action-reaction lines if you're good at it. Yeah, you could do a sliding parallel. Absolutely, Ahmed. Nothing wrong with that. You could draw on this center line right here. All I did was grab this high, go through this high, grab this low. Now I've got my slope. I grab this low. That gives me the width. Pass it over. Looks pretty good. Pass it over. Looks pretty good. Pass it over. Looks pretty good. And I've got a pretty good idea of what's going on with price. Now that makes me think maybe this is an area where price is going to turn down. Let's pretend Albert is bearish. Okay, Albert? I'm making you bearish. Take a look. Without any lines, probably not ready to trade. What's a trader to do? How about we pretend, now remember, this isn't a swing high. Price is still going up. But let's pretend that this is going to become a swing high. So we'll draw it in anyway. Albert says, you know what, I think this might be a swing high. So Albert draws in high, low, and I think this is the area where this might be a swing high. And he even says, now I'm not sure if I want the traditional median line or the modified Schiff. Same idea. If price is about to turn, this may be the C pivot. The question remains, is Albert ready to trade now? This is what I suggest for Albert. What I would want to see, I don't mind drawing this, and I'll draw it sometimes. I'm drawing it in space. If I look at it, let me go back one. If I look at this one, it's okay. It's okay. I'm looking at the tail. I'm looking at the touches on the tail. But let's look at this one. Look at the touches on this tail. I like this. Cuts through nicely here. Grabs this bottom. Look at the action here. If I projected it forward, this has a nice frequency. Just eyeballing it. Somebody emailed me at Christmas time and said, frequency. I went and bought a physics book to try and understand frequency. No. Just look at it. Just take a look. You don't have a, oh, I don't have a pointer, I'm sorry. There we go. Look at it grab here. Look at it cut through the center here. Look at it grab the bottom here. If I extended it out, you can see it cuts through right here. This has everything I like in a center line, even though it's a median line. So I like the modified Schiff better. So if I wanted to get short, I might like this, but I'm not ready to trade. What am I ready to do? I'm ready to draw. What if we did this, Albert? And Albert's getting antsy, but he's not going to chase price. We get another lower bar, but then we start to come back up. And we come up a little higher. Wish I was a little better at drawing this. And we get right up in this area, and he's thinking about it, and he gets this action, and this bar closes. It did pass through, but it closes on its low. Now Albert says, hey, I like this an awful lot. If this gets back up to the red upper parallel, I'm going to get short. And here's what he gets. He gets a small inside bar that doesn't do much of anything, and the next bar is the gift. And Albert gets short at the upper parallel. This is a test and retest. And remember, this bar busted above but closed near its low. Albert gets short, and you're going to get this kind of action. Albert's going to get the post-Christmas gift. Wide range bar lower, some news comes out. He doesn't have to chase it. You get the idea. We put one more in there. That's what we're looking for. Stop loss, stop would be right here. Make sense? Rather than put your stop arbitrarily at a line, use a prior high, because boys and girls are going to be standing there. And by the way, this corresponds with this prior high as well. So whales like me, if we're not using median lines, and a lot of whales don't, are thinking about, hey, at prior highs, I'm willing to get short. So this is one way, if you were looking to get short, that you might diagram it out and play what if, and it actually will work for you. Watch this replay and think about this, guys. Guys and girls, I should say. By the way, the markets, the participants are about half. Okay, so let's look at the euro real quick. I don't want to run out of time. Targets, you're on your own. How about that? I see a series of well-formed up and down waves. The highs are lower. Look at the highs. All lower. I don't know. I can't mark this one. I don't know where it's at yet, right? Let me get my cursor back here. Anybody see a trade yet? You know, at the moment I'm stopping asking questions. Sorry. Yeah, I don't see anything either. What do I see? It's meandering. It is making lower highs, but now let's look at the bottoms. Low, lower, higher. I'm not so sure now. Maybe it's just consolidating. Let's tear it apart a little bit more. Well, I guess I marked it. Here's swing high, swing high, swing high, swing low, swing low. This is in a brighter green because it's not a certified swing low, because we haven't taken any highs out. In order to become a swing low, we have to take a swing high out, right? Trend line up, I don't. Okay, you can draw one if you want. I don't really see one. I guess I could draw. Well, maybe I draw a median. Let's see what I do. Oh, look. Son of a gun, I actually draw. So let's draw an action-reaction line. What do? I cut through the center of the action. This is not a channel. This is not a regression line. This is an action-reaction line. I grab the high. I go through some major highs and lows. See it? Grab highs and lows. Then I go to a major low, flip it over. That gives me the distance, so the width. Flip it over again. This is the action line. This is the reaction line. It could certainly be the other way around. This could be the action line. This could be the reaction line. What does it grab? Does a great job grabbing the lows. Does a great job grabbing the highs. We've got a pretty good looking probable path of price right in front of us. Anybody ready to trade yet? No, we're in the middle of nowhere. We've got a nice multi-pivot line here. I left in the center line, and the action line. Make decisions at the edges. Absolutely, Ron. Well, so in my opinion, the euro, jury's out, not ready to trade. Gold. This set of lines, I've done 2 interactive broker seminars on this exact set of lines in the past 18 months without even changing the lines, and done some live trades on these lines. How about that? Price is consolidating at the moment. I'm waiting. Are you? Let's take a look at it closer. This is this area closer. Now, the last time I did gold for the CME and the IB, I got long live right here. And you can go back and watch the presentation. I told everybody that my profit target was this multi-pivot line. I didn't think it would go to new highs. I thought we'd test this multi-pivot line. Let me out. If it goes to new highs, it goes to new highs, but I just want my money. The funny thing is, I told you I quit trading second week of October. Look where I got taken out second week of October. So even if it hadn't been at this multi-pivot line, I would have had to bail. But luckily, we were at the right place at the right time. Look where we are. Pay attention. We're at the lower parallel. Let's go back. We're at that lower parallel. Price time projection, this is simple. I'm buying against a line that's been beaten, 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 beaten. Whales are here, large traders like me, people that have 50, 70, $100 billion to trade are sitting on the bid here at 1,500, 1,550. They'll buy all the gold in the world right here. They're buying it for themselves, they're buying it for China, they're buying it for other sovereign wealth funds. Then they're taking their own profits up in this area. There's no demand at the moment up here. It's very simple. Sometimes people make trading much too difficult. Now here I added a downsloping modified shift median line. This is drawn off of this low, this high, and this high, but it's then shifted down halfway and over halfway, and it grabbed the price action pretty darn good. You can see it grabbed a low perfectly here. This is where I got long, and it gave you a pretty good idea where it was likely to run out of energy to the upside. There's even an inside smaller median line that gives you the same frequency. Not that that matters. But when you get these at home, go ahead and blow this up and take a look. In fact, we'll blow it up now and take a look. Here you go. Here's the consolidation with the modified shift. This modified shift, I got long right here. Look at the modified shift. It gave you the exact area that price should run out of energy. Very simple. The warning line told you just about where it was going to run out. You don't want to be a pig. Generally, on these types of moves, I get out at about 80% of the move toward either the upper parallel or the warning line. In this case, I got out because it was the middle of October and I had to get out, but it was also at the multi-pivot line. Multi-pivot line, this high, this high, this high, time to get out. Just like down here. This low, this low, this low. Hey, hit me 3 times in the head, I think it's time to get long. Don't make it too difficult. Yeah, in this sense, it is a range. I'm not suggesting range trading, but in this sense, it is a range. But look what the modified shift median line gave you. It told you exactly where to get long before price took off. What would you pay to know that? Well, you don't have to pay anything. I just showed you how to draw it. It's free. Take it, use it, study it. As above, so below. Exactly right. Thank you, Cal. That's from the Emerald Tablet, and it's Sir Isaac Newton's favorite quote. Let's take a look at crude. Yep, 5 minutes. I got it sent to you. I may even not take questions. We'll see if this is even interesting. If it's not interesting, we'll just go to questions for 5 minutes. Again, I use both these lines for 2 IB seminars. I made 2 huge trades in the oil off these lines. But here's the problem. Look where we are now. We're caught between 80 and 90, maybe even less. This is not even worth my time. I don't trade for $10 in the oil, boys and girls. Not on daily bars. Because we often get a bar that's $8 long. So you have to ask yourself, do I want to trade now, or do I want oil to break out and then trade? I'm just going to give you a quick view. You can look at soybeans, you can look at Swiss futures. Oh, it's very nice charts in the Swiss futures. And you can look at yen, great setups in the yen. My partner Shane has a beautiful short trade going on right here. And look what's going on. And you can see how he thinks it's going to play out. And here's what's going on in cattle futures. But you guys can do that yourself. You're going to get the slides. Go ahead and take care of them. Cynthia, let's go like 5 minutes long. Let's just take a few questions. How about that? And then be done. I'm unfortunately tied up, but let's do some questions. Type quick. I wish I could stay longer, folks. Best book to study Andrews. Go to marketgeometry.com. Go to free information. Alan Andrews' original course is there. It's called the Action Reaction course. It's difficult to read, but that's my favorite. Second favorite is I have a book, but I'm not suggesting anybody should buy anything. There's 100 free articles at Market Geometry or medianline.com. 100 free articles. Do I use median lines to trade stocks? Absolutely. For those of you that are relatively new here, I trade I'm over 25,000 fifth graders this year, and the only thing they're allowed to trade, and I trade them on a regular basis. I teach them once a week, and they have a contest, and first prize winner is an Apple computer, second is a Mac Air, et cetera, et cetera. This year it's sponsored by Apple, and they are only allowed to be long stocks, and they use median. Past years they haven't used median lines. This year I've introduced median lines. It works like a charm, sure. Do I have a live trade room? No, we don't call out charts, Rob. What we do have at Market Geometry is 3 times a week for about an hour and a half, 2 hours. My partner and I teach you how to trade. And it's everything from simple to basic to advanced. So that's at marketgeometry.com. You can look right there, or at medianline.com. Given that AR lines involve art, why not spend some time expanding the process about identifying center lines? Rahesh, maybe there'll be a time when I'm have a couple hours and we'll do it with Cynthia. Sure, why not? Good idea for a topic. It'll always have a lot of art, though. How do you avoid missing an entry following so many markets? Paul, you're always going to miss entries. If you spend your time worrying about entries that you missed, worrying about the times you got stopped out, then you won't have time to make money in the markets. You just can't worry. Been studying Andrew's 0 to 304 center lines in AR. Do you find your sort of multi-pivot lines as center lines have about the same probability as Andrew's center lines? Well, Kathleen, I studied with Dr. Andrews for 15 years. I'm the world's authority in median lines at this point. And, you know, spending all your time being anal about 0.3 and 0.4 and all the other stuff, the amount of material that is written by Dr. Andrews that's available is about 1% of what he taught, unfortunately. Most of the things that he taught live at his home. And so I don't spend my time focusing on the things that so many people that read the 60 or 70 pages that are available. You're looking through a window at the world, and I think you're getting lost in the bushes. The best thing to do is draw, draw, draw. Do you find yourself taking what looks like a good setup only to then have to change the lines when they fail, break, and then do you lose faith at that point? No, I never change my lines. If I'm in a, Rob, when I'm in a trade, my lines are locked, okay? I have my plan written down on paper before I take the trade. I don't change the lines. I don't change the stop ever, other than to move it closer to the action. If I get stopped out, I get stopped out. That's okay. Next trade. I don't ever change my mind. If you keep an old median line, oh, you guys are writing so fast, I'm losing you. Hang on. You keep an old median line on your chart and it comes back into play. Is the validity as powerful, or has its validity been diminished? It depends. If it's been tested and retested and then we come back and we test it, it's in play and it's all good. Yeah, I'll use it. Somebody said earlier, and they were quoting me, beat on a line until it beats you. Have you published any books? Sure. Go to medianline.com. There's one right now, which is purely on median lines, trading with median lines. That's available. Yep, Cynthia just highlighted it. Thank you. And I have another one coming out. What's the smallest time frame you use pitchforks on? I have students that use them on 10-tick E-mini S&P charts. I don't any longer. I'm 54. I'm slowing down. So 15 minutes, 1,444 bond ticks. That's pretty slow for me. Foreign exchange, I tend to trade 20-minute charts or 240-minute charts. And then I portfolio trade, which means a bunch of things, on dailies, weeklies, and monthlies, and hold on to them for 6 weeks, 8 weeks, couple months. You've often emphasized the close of the bar. Are there ways a whale can manipulate the close of a bar? I'm thinking in terms of separation as an edge. Absolutely. One of my favorite traders, great friend of mine, Richard Dennis, is known for deciding, I want this bar to close here, and he'll spend a great deal amount of money, including if he's trading futures, he'll go into the options, do a lot of options trading as well to try and get a close that he wants. I don't bother, but there's lots of people. Linda Raschke's another example. They feel that if they can change the way the market looks, that they'll change market participants' ideas. Basically, I think the market's going where the market's going, but that's just me. What time is your live mentoring and premium membership? Well, it's 11 o'clock Arizona time for the live sessions. We go 11 to 12:30, quarter to 1. And then we also mentor individually. If you apply and meet the requirements, we also mentor individually, and that's once a month for a couple hours. When do you draw two forks in your chart? Which one will you follow? It depends on which one price is respecting. So if price bounces off of one 3 or 4 times and it holds, I'm going to be paying attention to that line, no doubt about it. Let's see. You guys draw fast. Trade the time frame you trade. Don't go into another time frame. Absolutely, Phil. And Phil's been around a long time. You should get familiar with one time frame, and then forget about it. Don't I know and love Dr. Elder, but he did a real disservice to people to try and get them to look at 3 different time frames and get everything to agree. Forget about it. Just look at one time frame. Get intimate with that time frame, and your trading will increase dramatically. Do you ever lose a trade? Yeah, Tom. My long-term, I've been trading for 42 years now. Imagine that. My long-term audited record, I'm a 66% profitable trader. So a third of my trades are losers. How about that? When I take a trade, a third of the time, loss. You just shake it off and move on. It's okay. Tom, do you want me to show some losses next time? Would that make you feel better? The problem is my losses are usually in the next bar or so, and there's really not that much to learn about them other than I picked a line and the market decided that I picked the wrong line. Do you believe in the theory that too many tests of a line make it invalid? No, I don't. However, I do get a little leery as the line, as the line gets old. Sure. Like anybody else, but I had one trade when I was mentoring 3,500 traders all at once at the CME. We got 27 winners in a row, 27 winners in a row off of one line in the E-mini S&P market. And those were intraday trades. We took it off the same median line, 27 trades in a row. By the end, only my partner and I, Joe, some of you have heard me talk about Andrew and Joe. Only Joe and I would take the last trade. We said, yeah, what the hell? This line deserves the trade. We took the trade. We lost a point and a half. Went out and had a beer. It happens. Can you help defining tick bar for 10-year note? 10-year notes, I'd start at something like 377 ticks. If it looks too chunky, then I'd go to more. Am I still in Arizona? Absolutely. I'm in Arizona. Sure, I'm up in Prescott. And I'm not going anywhere. Take care, Ryan, in South Africa. Yeah, I'm going to call it. Cynthia says no report. So I'm coming off a long rest. I'm going to be back in 4 weeks. I know you guys have a ton of more questions. Let's do this. Let's take out next time. I'll do my normal 2.5 hours, even though we say it's an hour, and I'll do my best to answer a lot of questions. How about that, Cynthia?
Oh, that sounds like a plan, Tim. And Tim, and what I do want to do is thank everyone, as well as Tim and the CME, because the CME has sponsored today's event, and it's their dedication to educating traders that's made today's event possible. Also, they have agreed to sponsor Tim now through the year, and we're going to be doing this at the second Thursday of every month. So everyone, we are going to be concluding today's event in just a few moments. So, but I do want you to know Tim will be back for much, much more. Now, also, do want to let everyone know, I know there were some audio difficulties here today, and people were asking for a copy of the slides. Well, both will be resolved very shortly. Now, the slides will be available as a separate browser once you enter in a separate browser as a PDF version, and you will find that as you drop off or exit today's session. It opens up in a separate browser window. Now also, because we have been recording, we will be sending out a direct link to the playback today soon. Normally takes about an hour to compile and upload to our servers, but that way you'll get a direct link to today's playback sent right to your email, and you can review it 24/7 whenever you have time.
Hey, Cynthia, are you gonna do a poll in a second?
I'm about to.
Okay. Well, hang on, boys and girls.
You jumped in right in time.
Yeah, when you get to the poll section, do me a favor. There's a little box there that says Other. Make sure you either type Cynthia's name in there, and it's Cynthia with a C, or type in webinar or webcast, because then the president of Interactive Broker, he's a wonderful guy, when he reviews this, he'll go, you know, maybe I ought to give more money to Cynthia because she does a wonderful job.
I'm not sure he'll listen to that, but anyway, thank you for that.
Well,
great.
You know what? I'll give him a call then.
Well, what I have just done is open up that polling panel, and I do appreciate the feedback. Now, notice there are 3 short questions there, and it's the responses to this poll that have really attracted my management team and allowed me to bring Tim back on a monthly basis. So if you would make your selections and make sure that you use the submit button that's located in the bottom right-hand corner of that polling panel. Now, it's only going to be open for about 15 more seconds, so if you do type any information into number 2, make sure that you type quickly. Now, you can also... Poll's about to end, so everyone please click submit now. So I'm going to turn this back over to Tim. Poll did end, so thanks everyone. Really appreciate that feedback. And I'm going to turn this back over to Tim to wrap it up for today. So thank you, Tim, and thank everyone for your participation here today.
Thank all of you. I really appreciate it. Some of you know that I was off for 3 months. I had planned some surgery that needed to be done, and it's taken me quite a while to recover, and nothing made me happier than to make my first public appearance back here with Cynthia and the CME. And Cynthia, you got to do me a favor and give Barbara a big kiss. Barbara couldn't make it today, but I'm fine with David. I'm just not going to give him a kiss. But I'm more than happy, to give them a handshake, but nothing makes me happier than to be here. I love doing this every month, and I'll sign up for the next 10 years. I hope you guys enjoyed it. I'm not sure what we're going to do next month, but I'm sure we'll do something interesting, and I'll block off a lot more time because I'll be a lot more rested at that point. And I guarantee next month I'll answer every question until everybody is out of questions. How about that?
And by the way, someone was asking, what date is it next month? Well, Tim, I can't wait to spend Valentine's Day with you. February 14th. It is. It's the second Thursday. So
I'm going to send you a present.
Oh, well, I think you'll have a Valentine's gift for everyone. So
I'm
be looking.
I'm going to send you a special one.
So everyone, please look at the Interactive Brokers website. We will be posting Tim's next presentation in the next couple of weeks as soon as we get it nailed down. You can find that underneath the education menu on the Interactive Brokers website, and then simply go down to the webinars and live webinars. You'll find all of those listings right there. So thanks, everyone.
Should we do egg futures? No, probably not. It's probably not.
You know what? I'm going to also discuss this with Barbara because she's got some great ideas as well.
Okay.
So
cool.
Join us on February 14th, and we'll hook up with Tim again for another terrific presentation. Thank you so much, Tim, for your time today and for everyone else's. Now, that is going to end today's presentation. Remember, watch your email later on for a link to the playback if you want to review the information, and the slides will be popping up as you exit today. So thanks, everyone. Have a great day, and do remember to trade smart.
Thanks, and Happy New Year to you all. I'll see you next month.